So if you're ever out there looking at a deal and someone says, hey, do you want to get involved in this deal passively, and they don't have a PPM, you probably should run the other way. Having a PPM is really, really important because it helps protect you as the investor from fraud or from something that goes wrong with the deal. So understanding what a PPM and reading a PPM is an important step in any deal you invest in, whether you invest with RSN or you invest with another company, understanding what the PPM looks like. G'day, ladies and gentlemen. Welcome to another cracking episode of Investing in the US. And I'm here again, joined with me with my business partner, Ben Gray. Ben, g'day. How you going, mate?
I'm doing okay, Reed. I've actually got COVID. I feel great, but I might cough and I might run out of breath as we talk. But forgive me for that. I'm here and I'm excited to do this great episode.
Yeah, so if you've been listening into some of the episodes we've been putting together, we are here at RSN or at the podcast. We're also trying to give investors a little bit more of and listeners a little bit more of an education about what we do behind the scenes, what our core of our business is, which is RSN Property Group. And part of these series of podcasts is really, created to help the average listener understand what real estate syndication is, how you get involved with it. And we're going to be doing a number of series of podcasts. So keep an eye out for that as they get launched. And in today's podcast, we're going to talk about the basics of real estate syndication, really syndication 101. And we're going to spend the next sort of 15, 20 minutes, maybe even 25 minutes walking you through high level stuff. If you've never even heard of syndication, why you'd get involved with it? What's the purpose of it? What's the structure? What legal things do you need to understand? And we'll then go about some of the benefits of investing in a real estate syndication. And again, this is all to try and help you as the average investor, the average passive investor, understand the benefits of different options out there, right? The power is in knowledge. So if you can have more power and you want to have part of your portfolio dedicated to real estate, maybe you don't have the time or the energy to figure out real estate, maybe real estate syndication might be a way for you to, diversify your portfolio. So with that being said, let's get into it. Ben, anything else before we dive into the topics today?
No, I'm excited to get into my section of all the benefits to LP investors. So take it away.
Yeah, well, with that being said, let's start from the beginning. So let's understand what is a syndication. Well, really a syndication is the coming together of a partnership. It's between investors, which is you guys out there listening, passive investors, and real estate operators. It forms a partnership. There's a really great analogy that I use all the time. It's like it's an airplane, right? And Ben's sitting in New York, and if you're watching this on YouTube, you'll see his beautiful background. Or I'm sitting in Los Angeles, right? And the analogy goes that if I want to go and get to Ben, I can go and hire a Boeing 747 by myself. Now, that Boeing 747 is going to cost me a lot of money. But if I split that cost up with other folks, other people who want to enjoy the benefits of getting from Los Angeles to New York, we can then reduce the costs individually. Now, in that same analogy, we have the captain and the co-pilot, which is Ben and myself, right? We're flying the plane as part of a syndication. And then you have all the limited partners, the passive investors sitting back in coach. They haven't had to fork out hundreds and hundreds of thousands of dollars to hire this plane. They've had to just fork out their seat, right? And they can enjoy the in-flight entertainment and enjoy the benefits along the way. And so in this analogy, we are the captain and co-pilot. We partner up with everyone else and we go off and we be able to buy or hire that Boeing 747 and get from point A to point B. That's exactly the same thing we do, except we're applying that to commercial multifamily real estate. So we at RSN, we don't just sit on massive amounts of cash. We go out and we partner up with investors like you guys who are listening in. We form that partnership, right? And the reason we form that partnership is ultimately leverage. You guys are leveraging us as the experts in the industry, and we're leveraging you guys for capital and equity to go buy these larger properties. Because again, we're not just sitting on hundreds of millions of dollars that we can go buy any piece of real estate out there. So we're really coming together and forming that partnership so we can both benefit. And the reason that you guys might be out there thinking about real estate investing, you want to diversify your portfolio, right? And here at RSN, we like to say that we would love to be any part of your portfolio dedicated to commercial real estate investing. We would love to be involved with that at any point when you decide to do that. And you might also realize that being an expert or running your day-to-day job, having keeping the roof over your head, having your making sure your family's fed and food on the table, it's a lot, right? And trying to determine where you want to place your money and if that happens to be in commercial real estate, you might not necessarily be the expert. And that's why you go partner up with people like us at RSN. And we can get into sort of our experience later on. But ultimately, You just don't have the time or the energy, but you want the benefits of investing in real estate. And Ben's going to go into that in a little bit more. But the crux of it is you've heard about it, you want to get involved with it. And instead of going into, say, a REIT, which is a publicly traded item on the stock market, you can come directly to people like us who we're the operators, and you can invest directly into deals that you can feel and touch. So partnership, it comes together. We are the experts in buying multifamily. You guys provide equity and liquidity for us, and we come together and we go off and buy these deals. Now, in terms of the process of how it's all brought together, you might say to us, well, hey, Ben and Reed, when do I know you've got a deal? Well, we, on the back end at RSN, we spend a lot of time looking for deals, like sort of think of like panhandling in the river, right? We're constantly looking, turning over rocks. We're trying to find that needle in a haystack. And we're looking at a lot of deals every single month. We have a whole team on the back end.
Just to jump in there, the analogy I use is it's like throwing out like 100 different fishing lines. And you get these little pulls, and eventually you get like one fish, and you reel it up, and you're like, oh, that one's too small. Let's put that one back. You go, this one's not right. And out of those 100, we might shortlist 5 and might ultimately only win 1. But that's the process, and you kind of never know when you're going to get the bite as well. It's exciting and anxiety-inducing process.
But for passive investors, the way you keep in touch with us is that you sign up to our email list, you sign up to our newsletters, you see our monthly content that we put out. And then when we have an actual deal, after we might looked at, maybe 50, 60 deals, we might find that one fish we want to bring on board. Then we'll let you guys know as investors, because you're part of our inner sanctum, and you've put your hand up and said, hey, I'm interested in investing with RSN in the future, and you can get on our mailing list. So once we identify the deal, we then go out to our investors and say, hey, this is a deal we've identified. Would you guys be interested in investing in this deal? And at that point, passive investors can assess the deal. We typically put together a really big package for, like, it's usually a 40 to 50 page PDF of the business plan of what we're going to do with these multifamily deals. And in this case, it will just be usually one singular deal. We'll talk about how we go in and we renovate the property, and we'll increase rents, and what we're buying it at, how we're going to manage the property. And it's sort of all packaged together in a business plan, and we email that out to investors. And so investors then look at that and put up their hand and say, I'm interested. I want to be involved in this deal. I want to find out more. And from there, we go and then host investment webinar. And that's where people can jump on. We walk through the deal, Ben and I. We also answer questions from investors live there. We sort of make sure that you understand every single element of a particular deal. From there, we then go form the syndication, which is the legal documentation, which we're going to talk about here in a little bit. And if you like the deal that we're presented to you during that webinar, and you want to take that next step and look at the legal documents, then you can do so. Once we've got the legal docs together, once we've got everyone on board and sign those legal docs, people wire money to their bank account, and then we go and close on the deal. And so overall, that's roughly the process of how it comes together to buy a deal. And I'm sure you got a lot of questions, and we'll try and answer them as we go. But one of the common questions we get is when you buy a deal, is it collateralized, or is it in part of another deal that can bring it down or cause a negative effect? And the short answer is no, we don't buy deals in a big fund. We buy deals one-off. So it might be ABC Smith Street in Phoenix, or ABC Smith Street in Greenville, South Carolina. And those are deals that you'll invest in directly. You can touch and feel it. You can fly to those deals and look at them, and you'll get all the benefits, which Ben is going to talk about here in a little bit. Ben, do you want to add anything to that before we get on to the next part of the podcast?
No, that's great. Let's keep moving.
So, we talked about why you want to invest. We're talking about the power of leveraging everyone's abilities, our ability as the operator to go out and find deals. And, we've done this over 24 different times to date over the last 10 years. But also we leverage you guys because you guys want to put money to work. And so we come together and form that partnership. We then spoke a little bit about the process. And now we're going to talk about how we structure the deal, right? So how do you guys get paid as investors, and how do we get paid as the operators? By and large, the simplistic way the way we like to structure our deals is very, very simple. Investors will own 70% of the deal, and then we as the general partners, so we call it general partners, which is the GPs, and you guys as investors are called limited partners, the passive investors. You guys as the limited partners will own typically 70% of the deal, and we will own 30% of the deal. And throughout the hold, the deal is going to spit off cash flow. We pay that cash flow, the first 6, 7, 8% to investors, right? That you guys get paid first, and then whatever's left over, we split 70-30. Now, when we come to sale time, we will then do the same thing. We'll pay off your initial investment. We'll give you what's called a preferred return per year. Usually it's between 6 and 7%. And then any profits there left after are split 70-30. And we typically try to look to buy deals that can generate, can double people's investments over a 5 to 7 year period. So with that being said, we, just to recap, we structure it in a way of investors get 70% of the deal, and we as general partners for doing the work get 30% of the deal. Ben, anything you want to add to that?
Yeah, I'll add one thing to that. Every real estate private equity firm will structure the deals slightly differently, but the way that we structure them at RSN, we only get paid if the deal is successful. If we only break even and only get your money back, we get nothing out of that deal. So we're highly incentivized to make the deal a huge success. The more of a success we can make the deal, the higher that 30% chunk becomes for us. So, we work our butts off.
Right. That's exactly right. And again, remember, guys, this is a high level overview. If you want any more information, on specific deals, you're just stumbling across real estate syndication for the first time, please reach out to us, and, we can reach out to us directly. You can reach out to me at reed@rsnpropertygroup.com, or you can reach out to Ben. It's ben@rsnpropertygroup.com. Now, with that being said, let's go on to the third and fourth topic, which is talking about the legal structure around the deal. Now, we talked about the actual structure of the deal, of how people get paid, but what are the documents that you might need to understand or learn or read about? And the basic documents that we are sending out to investors is what's called a PPM, a private placement memorandum, because we are actually selling securities in an operating business, which happens to be the real estate, right? So, and because we are the general partners and we make the decisions, passive investors, which are limited partners, are being sold that security. And so we come under the Security Exchange Commission. We have to comply to a few different rules. Typically, the rules that we like to comply with is called Regulation D for David. And in that regulation, there is a requirement that we need to put together and send forth to all investors to review is a PPM. And a PPM is a private placement memorandum. It outlines the business plan. It outlines your investment in the deal. It outlines all the risks involved in the deal. It outlines the business plan in terms of, the upsides and the downsides of a particular deal. It's a very important piece of document that is usually, 50, 60, 70, 100 pages long, Ben?
Yeah, that big.
Yeah, but it is something very, very important. So if you're ever out there looking at a deal and someone says, hey, do you want to get involved in this deal passively, and they don't have a PPM, you probably should run the other way. Having a PPM is really, really important because it helps protect you as the investor from fraud or from something that goes wrong with the deal. So understanding what a PPM and reading a PPM is an important step in any deal you invest in, whether you invest with RSN or you invest with another company, understanding what the PPM looks like. So if you have any questions on PPM, again, the PPM is a long document and I could spend a whole hour talking about it, but by and large, we produce those PPMs for those investors who say, hey, I want to invest in this deal. I'm interested. Can you please send me the PPM? And from that PPM, they can review it, they can sign it. And once they sign it, that means they're legally involved in the deal. And now we form that partnership, as I mentioned earlier.
Yeah, I'll add two things to that. So it's all about lawyers and the PPM. Number one, you want to have your lawyer, maybe your accountant as well, review that PPM so that you understand exactly what's going on. That goes without saying. You're investing a lot of money. But more than that, you want to understand that who the lawyer is of the people that you're working with, because not all law firms are the same and not all PPMs are the same. Reed and I spend tens of thousands of dollars on our legal team. They're really good, very expensive. We make jokes about it with them all the time. How you doing, Peter? And a lot of other firms may not. They might sort of do it on the cheap. They might even grab templates off the internet. You want to really understand the team backing the operators and backing the syndication that you're working with as part of your due diligence. And
part of the due diligence is you might be able to get to you might be able to see a multitude of deals, right? And you might be able to sign up, say, hey, I'm interested. Can you send me the PPM? And ultimately, if you don't sign the PPM, it's not a legal binding contract. You could review a lot of people's different PPMs to get you familiar with what those disclosures are in those PPMs, to understand, whether the paper it's written on is worth it, right? For to help protect you and your investment, because that's the most important thing that we're trying to do is protect your original investment, and we invest in deals like physical deals like real estate. So with that being said, PPM is a long list of things. I will touch on just one thing before we move on is accreditation status. It's very important what accreditation status is. So the SEC has set up rules about who can invest in private companies. And again, a PPM is a private placement memorandum. It is for companies that are not publicly listed on the stock exchange. We go out and raise money privately. And there's two ways you can do it. You can raise money from non-accredited investors, or you can raise money from accredited investors. I'm not going to get into the nuances of the differences of the two, but ultimately, if you're allowing people who are non-accredited investors to invest with you, you cannot publicly solicit the deal. Right, you can't go out on the website and or online and say, "Hey, I've got this brand spanking new deal. Come and have a look." So at RSN, we actually only accept accredited investors because we do like to go publicly solicit, and that's under a different section of the Regulation D. And for that, you need to understand what does accredited mean and what does non-accredited mean. So an accredited investor is someone who earns individually $200,000 or more a year and can prove it for 2 previous tax years, or you have a net worth of over $1 million, excluding your primary residence. So I'm just going to quickly repeat that again. So if you are earning over $200,000 a year as an individual and you can prove it for the past 2 years, you're accredited. Or you have a net worth of over $1 million without your primary residence, you're accredited. Or there's a third way. If you and your wife file jointly, or you and your partner file jointly, and you earn $300,000 or more, then you also qualify for being an accredited investor. Ben, do you want to add anything there?
Yeah, absolutely. A few things I'd like to add. I got to stop myself from going off here, but when you want to qualify for the 1 million in assets, what a lot of people don't realize is you can use your 401k, you can use annuities sometimes, you can use like notes, like sometimes people sell a business and they, hold a note. There's a bunch of different ways you can qualify for that a lot of people don't realize. It's certainly not $1 million in liquid cash. I'll pause there, but we have a lot of deep discussions about accreditation and helping people get accredited at RSN, that's for sure.
And again, this is all high-level education for people that just have stumble across real estate syndications, want to understand a little bit more, and they want to learn. This is why you're listening to this particular podcast. If you have any more questions, we do highly recommend you reach out. It's read@rsnpropertygroup.com or Ben, B-E-N, at rsnpropertygroup.com. Again, this series of podcasts that are coming out over the next month or so are designed to help educate you guys as an audience to learn more about the benefits of investing passively into real estate syndications. So with that being said, Ben, do you want to wrap it up with some of the benefits of why you would invest with RSN and why you would invest passively?
Yeah, absolutely. Well, the key thing is if you're an accredited investor, you have access to the private market. And historically, the private market has outperformed the public market, the S&P 500, the stock market. Wealthy, very wealthy people invest in the private markets. It's just what they do. It's where you generate the highest returns. So inherently, one of the benefits of being able to invest in syndications is high returns. And it varies on deal to deal. It varies from operator to operator. But, you're looking at potentially somewhere around 20% annualized returns. Could be less, could be more. But obviously, that's, beating a lot of other investments that you could be looking at. Now, there's inherently risks that come along with that. And, we can talk about that as well, but that's one of the key benefits, the opportunity to get exposure to higher returns than you can often get elsewhere. Now, the other thing is that these investments are largely passive. We're going to do a whole nother section on how nothing is truly passive. You do have to do due diligence on the operator. You do have to, keep your finger on the pulse of the deal and make sure you know what's going on, especially if you're going to be making subsequent investments in, multiple syndications. But at the end of the day, the key thing is that it's very passive compared to other investments. You find a great operator, and exactly like Reed said, that operator handles the day-to-day. We're the ones, dealing with the property management company, dealing with, leaky toilets, plumbing issues. You don't have to worry about anything. You get your monthly updates and you keep your finger on the pulse, and you're allowed to focus your entire time on your family, your job, and everything else that you want to do in your life. The other key benefit is that these investments are typically structured to be highly tax efficient. So that means that there's going to be paper losses that filter down to you on your K1, which is the tax form that you get that represents how much money you've earned, lost, et cetera, being a part of this, business partnership that owns the real estate. And that can vary based on the deal and vary based on how the operator structures things. And it varies based on your personal tax situation. So I'm not going to get into that in a lot of detail because it's, how long's a piece of rope, but these investments can be very good for reducing your tax burden as well. And the other thing that Reed touched on a little bit is portfolio diversification. Most people in America do not have a balanced portfolio. Some people don't have a portfolio at all. Those that do have, very heavily invested in their 401k, and that might be the extent of their portfolio. Maybe they own their own personal home. Maybe you think about rental properties. But at the end of the day, the vast majority of the United States is underweight on real estate in their portfolio and overweight on stocks and bonds and paper assets. So syndication offers you the opportunity to easily diversify your portfolio and get that exposure to real estate, again, without having to be an expert and learning the trade and worrying about getting calls at 3:00 on a Sunday morning. The other benefit is that typically real estate is a good inflation hedge. So as inflation goes up, rents will also go up, and the cost of properties will also go up. I'm massively oversimplifying a complicated topic here, but I'll leave it there that real estate and these kinds of investments can be an excellent inflation hedge. And the other key benefit that I'll end with is you're going to be able to get quarterly and monthly cash flow. So it's not like you invest in this deal and your money is just locked up for a number of years. As Reed alluded to earlier, the property produces cash flow from the rental income that exceeds the expenses. And that quarterly or monthly cash flow, depending on how the syndicator decides to distribute it, gets paid out to you. So you can supplement your income. And, we even at RSN sometimes have, or often have, what we call the Class A shares, which are maybe 10% or maybe a little bit less, maybe a little bit more in consistent cash flows. So for a lot of people who are just need cash flow for various reasons, maybe they're close to retirement, maybe they just want a little bit more fixed income in their portfolio. It can be a great way to generate a lot of cash that you get on a regular basis and, balance out your portfolio. And again, we could talk about this for a really long time. There's a lot of benefits and we could go really deep into these benefits as well, but we're not here all day. That's a good primer and that's it on the benefits for now, Reed.
Yeah, thanks, Ben. And just, every deal is structured slightly differently. Every deal has its own flavor. The takeaway here is to understand why you get involved in real estate. And just to quickly summarize what we've covered on today, we've talked about the basics or what is syndication. We talk about the basics of, the plain analogy, pooling investors' money together to take down large assets. We talked about a little bit about structuring, why how you'd structure and get paid as an investor. We spoke about the benefits of why you come and inform that structure, why you get involved in the syndication. You may have, want to get involved in real estate, commercial real estate investing, but you don't have the time or the energy. So this is where syndication comes in and plays a really important role. We also spoke about some of the legal requirements, the PPMs and Regulation D for David and the SEC. A lot of stuff goes into that, and obviously you'll have a lot more questions, but we did a high-level overview of what that means and what you need to look out for. And again, if you are looking for an example PPM or example documentation, we're more than happy to provide that if you reach out. And then Ben brought it home with summarizing some of the benefits of being a passive investor outside of, just, you don't have the time or the energy, but some of the benefits you get from investing directly into hard assets, everything from being highly tax efficient to also being an inflation hedge. So with that being said, Ben, anything else you want to add here before we wrap it up and tell people where to go?
Well, you can always go to rsnpropertygroup.com and go to readgoossens.com and keep watching the podcast. Our aim here is to keep giving educational information and, knowledge is power.
That's exactly right. And as Ben said, the reason we do this show each and every week is to increase the listeners' financial IQ. You've heard from hundreds of my guests over the years about what they do. We're spending a little bit of time over the next couple of weeks, couple of months, telling you a little bit about the business behind investing in the US and our core of our business, which is RSN Property Group. So with that being said, if you do like this show, the easiest way to give back is to give it a 5-star review on iTunes. If you do have any questions from today, please reach out to us at rsnpropertygroup.com. Don't be afraid to reach out with any questions. And we're going to do this all again next week. So remember, be bold, be brave, and go give life a crack.